Marico has come out with its Q1FY22 update, and surely that gives us a sense of what to expect from FMCG companies, consumer staple companies, and what is the trend that actually consumer companies have seen this time around. So let's talk about the demand trends first. Now, the company is saying that they saw healthy momentum that they saw in the month of March has sustained through the first 3 weeks of April. But post that, the second wave did come in, and that did impact the demand of the company. So post that, yes, we did see an impact of the second wave, but it was not as much as what we saw of the first wave. The impact is what the company said and what they have highlighted. Now, overall demand trend, yes, April, May, post the first 3 weeks of April and May was a bit tough, but overall the demand trend has been much better since the early June as well. So June month was much better than what the month of May was, especially as the second wave hit. And on the back of that, obviously, they are expecting to deliver a 30% plus revenue growth in terms on a year-on-year basis, especially backed by a robust double-digit growth coming in terms of the volume growth as well. So surely demand trends improving in June is what the company has highlighted. Now let's talk about another concern is the input costs, margins, input costs. That was impacted even last time. We've seen input costs seeing a high increase, a sharp increase, most of the input costs as well. So because of that, margins were under pressure. Now this time around also, operating margins in this quarter are expected to drop sharply on a year-on-year basis, and the company on the back of that also expects a muted bottom line growth this quarter. So this is overall an impact coming in on the costs as well as the margins as well. Input costs have seen a sharp rise as well. Now what the company is highlighting that yes, the key input costs had seen a peak. From the peak, now they are coming down. They've already peaked. So going forward, gross margins as well as operating margins could improve more, as well as on a sequential basis also we could see an improvement. But on a year-on-year basis, margins are going to see a sharp fall this time around. Now in terms of the international business of the company, they are expecting a constant currency growth in the low 20s, and especially on the back of the sustained momentum that they've seen coming in the Bangladesh business. And that has seen a good growth that has actually helped the company in the last couple of quarters as well, and that is what has continued even this time around, is what the company is highlighting. Now overall, other than Bangladesh also, they are seeing a broad-based recovery across markets. So surely international business is expecting a low 20s growth is what we can expect over there. Outlook going forward, the company is like they're hoping to deliver and sustain this profitable led volume growth going forward in the midterm as well. So all in all, yes, key highlights: April was tough post the first 3 weeks. June seeing signs of improvement, better than what we saw in post the second half of April as well as May. So surely, all in all, let's expect a 30% revenue growth expected from Marico.